Hello, good evening, everyone. Thank you for joining in tonight for the market session. I hope to be very short with this, and then let's quickly check few of the few uh, market pairs, and then we're going to be checking few forex pairs, and then checking few assets. So tonight we are going to be working with. Altogether, I think I have how many pairs here? One, two, three, four, five, six, seven. So maximum of seven, might not even do up to that seven. So let's get started as I share my screen. Please confirm you can see my screen and you can hear me clearly. Okay, so the first on my list will be gold. The first on my list will be gold, XAU. Okay, let me just quickly search for it here. XAUUSD. Okay, so this is gold. Let's look at gold and then so let's quickly do uh, bottom up analysis on gold. So we can see that month on month gold has been in a bull market, and then currently January has been very bullish for gold. As you can see, this is January, this was December, this was November. So the month January has been very bullish for gold USD. So let's see what is possible on the weekly time frame. So the weekly time frame is also showing the same, which is, you know, has been, you know, bullish. As you can see, so let's just count the market structure. We have the low here, then we have the high here, we have the higher low. So we are expecting to see a higher high. So if this bull market or this bullish trend is going to end, we must see um, this low taken out, this higher low totally taken out, and we can see that the market has been um, trying to do that. Market has been moving between this range in the last few weeks. So let's go a little bit down. So, but currently, if you look at this clearly, currently it's looking more like a bearish market than a bullish market. But since most of us are day trader, we cannot make any trade decision based on the monthly time frame or the weekly time frame. So we are just going to go to the daily time frame and then the 4 hour time frame. Like I've said, we checked the monthly time frame and the weekly time frame to know, which environment is good at the moment. Is it a bullish market? Is it a bearish market? And as we can see, it is bullish until we are able to take that low, which is not even looking like the market is approaching anyway. So this is the daily time frame. And then what can you see here? What I can see here is, let's just look at the structure here. This is the highest we've seen, then we saw a low, then came back here to see a lower high, but the market refused to create a lower low. So even this cannot really be, we cannot, I cannot really take this as a new high. But even if it's a new high, it is still lower than the highest high, so it's negligible. And then same thing here, a higher low, still saying that we are bullish. So now let's now look at what is more recent. This is the most recent trend here. So let me take out all of these since they've been mitigated already. Let me take them out so that we can have a close to clean chart. Okay, so now that we have the new trend clear, it's obviously bullish. Market has been trending higher. Market has been trending higher and higher, in the last few days. So market has been trending higher and higher in the last few days. So this here we go. Let's go to the 4 hours. We are literally getting closer to the decision point. So this is okay. Before we go to the 4 hours, let's go to one day. I don't think we'll be able to do more than 3 pairs today. I believe I'm spending too much time here. So the question I'm asking is, market has been trying to take, market has been trying to take uh, to approach a particular high, and then the question we should be asking ourselves is, what is attracting markets at that particular high? So now, depending on how you trade, there is um, a fair value gap around there, which market is um, currently on. You can see market price is currently around that fair value gap. So the fair value gap has been attracting the market. And then there's also another fair value gap here. These are liquidity spots. These are where money are lying, which naturally attracts price. These are the places that attract price. So no matter what price does, price must come back to fill up those areas in the market. Price must is always coming back to fill up those areas in the market. So obviously this has been mitigated now. We might be approaching this place. We just might be approaching this place. But before we do that, one thing that is clear is market move from one level of liquidity into another level of liquidity. So I'm saying that, just like we count market structure, we can also count liquidity in and out. So market creates a new high, takes liquidity above the last high, then comes back into the structure and take liquidity within the created structure as well. So if you understand what I'm saying, so now that we know where market is likely going to be going next, based on liquidity and then imbalance in the market. So we have markets, you have a fair value gap here, we have an order block here, and then market can even come and take liquidity above this old high. So we have three things attracting markets here alone. Fair value gap is one. Um, Let me put this here. Okay. So fair value gap is one. Order block is two. Liquidity above old high is three. Now that we know that we have something to pull price up, let's go to 4 hours and see if we can profitably see how that is likely to play out. So this is 4 hours, and the last trend has been bullish. So market has moved from point A to point B, which is to take out the hold high. This order has been taken out. A new so there's a market structure. There's a break in market structure here. There's a break of structure here. And then what is going to happen next? Market is going to come down into this structure because now we've confirmed we are going higher to take up liquidity. So We are now looking for on H4, where can what can we find in this market structure that is likely to attract market for that movement, that's able to propel market, give market the required momentum. Momentum is money, money is momentum, liquidity. So, and then the rule to that is this: whatever we even found or we are looking for must be what? Below, must be in our money spot. Money spot is in our discount level. So we are saying that here market has moved from here to here. This is the 50%. What we are looking for should be below that 50%, because that give it higher probability for movement. So this is the 50%. We have a order block here, we have another order block here, and then, so if we are looking for, personally, I'm actually looking for a fair value gap. That's what I'm looking for. I'm looking for a fair value gap, or let's even say a breaker block or something. So naturally, as I can see, we have a breaker block here, but then this is just below the 50%. I'm not so sure if this will hold, but it also confluence with another an order block. So let's see how market plays out. The point of return is what we are trying to mark, to be sure, so that we can have, so this order block also, kind of confluence with a breaker block here also. I don't know if you can see what I'm marking here. So it's also confluencing with a breaker block as well. So let's go to 1 hour and see if we can spot something better. Can you see what I'm saying? I can see a fair value gap here. I can see a fair value gap here, here. So let me take this out and mark the fair value gap for better visibility. Can you see that? So I can see a fair value gap here. Yes. So, and that's the essence of going into lower time frame. It reduces your entry and all of that, makes give you a more specific uh, entry. So for now, that's what we have, except we are going to also look into here a breaker block. So market is likely going to, so what we are looking at is, so this is what we are trying to say. We are saying from where market is now, market is going to open. Once market open, it comes in and take liquidity in this fair value gap. There's a fair value gap also here. So market is going to come to take this fair value gap, or come to take another block here. Then after that, come all the way down here or here, pick up the liquidity we have here in the imbalance. Then we now move, after gathering that much of momentum, we now move all the way to what we said will attract market from the, you remember, 4 hours. So all the way here. Of course, it's not going to just go like that. It's going to come back at some point or the other. But that is what I expect to see in the market. So I'm not so sure if this will play out all in this week. If this week, if this will play out totally this week, or it will spread into next week. But let's see. Let's see what happens. That is my prediction for gold. This is my prediction for gold. So let's move into what else? Let's move into BTC, Bitcoin. So BTC USD, BTC USD. Let's go to, let's start from 1 month. So 1 month. So here we are. We can see the chart of BTC USD. So if you are there and you can hear me clearly, please drop a chat. Let me know you are listening. Let me know you are there. And the people on the other platform, if you have any question, please also drop it on the chat box so that I can see your question and then answer your question. So let's get into BTC USD. Let's get into BTC USD. So this is obviously bullish. Even a non-trader know that Bitcoin has been bullish in the last how many months? The last few months, especially since last month that Trump came, won the election. So we know Bitcoin is bullish. Let's go to the weekly time frame. Weekly time frame also very bullish. Also very, so we saw a little retracement in the last few weeks, but the market is currently taking that up again. So let's go to the daily time frame now. The daily time frame where we most likely will be spending some time. So daily time frame, as you can see, let's quickly count the structure. This is a low, this is a high, this is a higher low, this is a lower high instead of a higher high. So what we saw, so this, this, if this has been taken out, let's say this, if this low here had taken this particular low out, we will have sensed a break of structure and be looking for a bearish entry. Now, you might want to say, so what about this? You can see this never closed below this. It is only the wicks. You can see it's just the wicks. So this is a liquidity grab and not a break of structure. Don't make that mistake. It's a, of course, you can see immediately that happened, market went up. So market just, what market did was, market came here. I predicted this was going to happen. Let me adjust this line. So market came here and then where's it? Where's it? Where's it? Where's it? Let me quickly label this. Um, no, where's this text? So what we have here is liquidity grab. Yes, that's what we have here. So market literally took up liquidity here by this. Liquidity is always resting on holder lows, past lows and that. So that is exactly what we saw happen here. And then after that, what did we see? Market shoot up. And then after shooting up, just to confirm we are still bullish, we saw what? A break of structure here. Can you see that? So we saw a break of structure here, BOS. We saw a break of structure here. So what are we looking for after that? We are looking the market comes into the structure to take more liquidity somewhere around there or somewhere below, just the discount area. Market comes into that discount area, take liquidity, then aim for here, aim for the all-time high. We are just 3,000 away from the all-time high. So let's get into 4 hours. So somebody might say, wow, you can see market has already retested the break of structure, so we are good to go. I would not say that. Honestly, I would not say that, because if you check this trend, this last trend, let's measure it. So pull up your this um, Fibonacci 2. Pull up your Fibonacci 2, and let's measure this. So you can see that this is even this is above, this retracement is above 50%. It does not mean market cannot go up. I'm just saying it is not safe to take a buy just because market have tested the break of structure. Now, the kind of um, market retest that you want to see is something I am expecting market here. This is where I'm expecting. It might not happen, but this is the safest place. If market comes here and it give us a break of structure to the upside, I can stake anything on it. I can stake any lot size on it that we will surely see at least 105 again and then 108. So that's how you to get high probability trade. So taking a buy from here is not a high probability trade. But if market ever comes down here, retest this place, now, and the reason this place is high probability is we have what? We have a fair value gap that is so obvious, and then we have a order block that is backing it, and we also have somewhere around here breaker block. So there's a lot of confluence around here, and don't forget it's also part of the. It is also that also happened in the discount area. So it is obvious that if market ever comes down to 92,556 again, somewhere around that place, it's going to be, in fact, just like we saw here, you can see that week, it might just come with a week and then see a very strong candle to the upside. Yes, smart traders have their money waiting here. That is it. So what are now my predictions? Let's go to into 1 hour if we can see some things clearly. And another thing is this: because we are traders, if you are so convinced that price is going to come there, and you have enough reason to, let me take out the Fibonacci tool. I don't like putting a lot of tools on my chart. So if you are a trader, since we know price is likely going to come here, of course we don't know that until we confirm market movement. But then based on what we have here, which is the fair value gap we can see here, which is the fair value gap we can see here. Based on this, we can short Bitcoin. That's what it means. We can find an entry somewhere once so market is likely going to come back, take up the liquidity above here. Since it has been taken, but I think market should take it more. So take liquidity above here, you know, give us an entry. The entry is going to look like this, most likely. First, let me zoom this out. Let me zoom this out. Let's even see what is there. You can see that we have a lot of small bullish candles here. So we are saying that this it's a movement. Then this, so you look at this. So you can see market came a little below this, came down, then went up again. So market is aiming for this order block. So what we are now looking for on this order block is, you know, break of structure. Where is the structure here? So let's go a little bit down. Trying to look for entry now for a bearish market. I mean, for the immediate. So you can see that all of these things, none of it has broken the market structure. So if we have something like this happen, say market comes here, break this, or I'll probably wait for it to break this, then market reverse again, you know, enter a fair value gap here, and then give us a bearish movement. So we can sell to that, to that particular place where we have already marked. So we can sell to this particular place where we have already marked. And as you can see, let's even try and put a diagonal support here. So you can see this also works into our support. So we need market to break that. For people that trade trend lines, support and resistance, we need market. So it is all the same thing. We just need to look at the market, with the level of liquidity and where money is lying. So because this is actually what drives the market. So look at this. So if we can have this breakout, a retest of it, especially in a breaker block, in a this if this happen here, it's also going to confluence a breaker block, fair value gap, and then we look for an entry and we sell. So anytime we are selling, we know that our TP is 93, somewhere around 93. Once we get there or before we get there, we take profit. Exactly, that is my prediction for Bitcoin. So is it going to happen all during this week? I don't know. But the other thing is this: looking at the fundamentals, Trump is going to be swearing in the next few days this week. So the pressure of the news might not allow this to happen. Just him winning the election, you know, started Bitcoin on this bullish, um, printing big candles since the last few weeks. So his inauguration into office and all of that might prevent this market movement to happen immediately. But market will find a way to balance itself. So let's just keep this open. Let's watch as the market unfold. But this is my prediction for the market. So the next thing, which is the last thing I'm going to be looking at on live today. So let me quickly check if you have any question or any comment. So good evening. If you are here with me, please drop a hi. Let me know you are here. If you are on if you are watching on YouTube or watching from any other platform, please drop like this video, drop a chat. Let me know you are watching. Let me know you can hear me clearly and you can see my screen. And if you have any question, please drop it in the chat box of the platform you are watching with. Thank you so much for joining tonight. So let me quickly go to the next one, which is DXY. So this will influence a lot of USPS. So instead of going through the USDPS one by one, so instead of going through the USD one by one, I would just be analyzing the DX. I'll be analyzing the DXY, which is the dollar index. So like we did for the other ones, let's look at this from the monthly time frame. So let's look at this on the monthly time frame. Market has been bullish for the last 4 months, and there's obviously a market, a break of structure happened here on the monthly time frame. So what are we waiting for next? We are waiting to see a retracement into, but we can't do all of that in the monthly time frame. So, and who says it has not even happened with this retracement? So let's get into weekly time frame, since we've confirmed this is monthly time frame is bullish, so weekly time frame is also super bullish. So let's now take time there So let's get into daily time frame. So look at this. I can't remember when I did this. This was a bullish pennant, or what's the name of the pattern? You know, the idea was for market to break out, and see, market broke out massively. So for all pairs that has, you know, um, for example, GPU USD, Euro USD, and all of that, they are going to sell massively that particular day. You know, sell massively that particular day. So, but let's get into what we want to do here. So let me for so that I will not get distracted by all of these charts. Let me clear all of the past all of the past drawings on the chart so that we can focus on the moment. So if you ask me, market has been bullish, awesomely bullish in the last few days, few weeks, and then what do we have here? Market is still in the bullish area. Market is still very bullish. And then what we should be looking for now, at the moment, let's look at it. This is the daily time frame. Let's count the structure rather. This is the low. This is the low. This is the high. This is what? A higher low. Then probably have a higher high. Do I want to count it as a low? This is a high. This is a higher high. There's a break of structure here. After a break of structure, what do we expect? We expect market to come take up this fair value gap. You can see this fair value gap is still very much open. So, and I don't think there's a way market is going to. So, market did not enter the fair value gap. So, this fair value gap has not been mitigated. There's still huge liquidity line here. There's still the imbalance here. So, we we cannot ignore it. Money must come back to it one way or the other, now or later. Money must come back to it. There are few other fair value gap on this chart that market must still come back to. We have this as well. We can say this has been touched, but then it is still open to being, you know, these are different money spots that market might want to come and take liquidity from. So though we are bullish, and then for us to have enough momentum to move, we might want to, come into this place. Let me even check if it is area. So let's get into 4 hours and let's see what is possible. So let's count the structure here. This is um, high, this is a low, there's a higher high, there's a higher low, then there's a higher high, and there is a higher low. So now, what are we looking for? For an immediate trade, we are looking at here. So is there anything here that is attracting price? Yes, there's a fair value gap here that price has actually taken care of. But there's another one here. Can you see? There's another one here. And this will be a perfect one if price gets here, because under it there's another block. Beside it there's a breaker block, which is which are huge. Those are, in all of it we have like four confluence. It's in the discount area, it's a fair value gap, there's another block, there's a breaker block, and and all of that. So we have that here. So if price comes down here, it will be an awesome thing to do. But then price has also taken care of another fair value gap here. But I won't be looking for a buy yet until we see what price is doing. So if even if we say that price has taken liquidity in that fair value gap and the price is ready to move up, we still need price to give us a break of structure to the upside, which is yet to happen. This last candle looks more like the break of structure has happened here. But you know what? I won't take that. I won't take that as a break of structure yet, so that we don't get trapped. So let the market open, and then let's see what is going to happen. So if you have a break of structure, that is market closing body and week above this level, you can see this level, because you can be surprised that what we are having here is liquidity grab. It's possible because these are money spots. There's money lying above all of this level. So market is likely going to take the money and come back into the fair value gap. It is not impossible. But let's see what market is going to do after the market opens tonight. Once market give us what it's doing, if it's a break of structure, then it's a good one. Then we probably mark this fair value gap for a retracement for liquidity to shoot to the up or to the high side. That's it. If this is a break of structure, we look for it there. If it's a liquidity grab, market goes all the way. So the liquidity grab, market still come down, comes up again into a fair value gap that we create, then go all the way into the fair value gaps that we have drawn into the institutional levels we've drawn that we attract price. So now that is one thing. What we use DXY to do is to know how to trade the other pair. So if we confirm this is a liquidity grab, that means the next thing we are looking forward to see, it's a bearish movement. So if DXY is bearish, what are we likely to see in the other pair? Depending on the correlation, depending on how, if USD is a base currency for the pair, like USD JPY, then you are looking to sell, to be looking for sell opportunity in USD JPY. If it is not the base currency like in GPU USD, you are looking to buy, GPU USD. That's how we trade. That's how we use DXY to determine, the trend for those ones. But don't just take it lightly. Don't just copy and paste. Check and analyze those pairs as well and be sure. But then let me put a caveat to this, because of what is happening this week, the inauguration of Trump as president of the US, the dollar is going to rally, and that's one thing. If dollar rallies, that is, if dollar goes up, Bitcoin and gold are supposed to, they are inversely correlated to the dollar, so they are supposed to fall. So we should see that fall on Bitcoin. But then, because Trump is also a crypto person, like support crypto, at least we assume he support crypto. So it's going to be a funny thing. Let's just wait and let's see how it works out. Dollar is supposed to be strong. Bitcoin is supposed to be strong as well. So let's see. And the pair is BTC USD. So what happened when the two currencies are strong? Let's look at what happened. It's going to be an interesting week, and I wish a very profitable week at that. So I don't think there's any question or any comment. So in the absence of further question, like I said, it's going to be a short one. I intend not to exceed 30 minutes, but currently we've done 41 minutes. So thank you so much for joining me tonight, analyzing the market. So there's a group where I have, people discuss market. So all of the ones we've discussed tonight, I'm going to screenshot them and put it on that group. If you want to join that group, just look for my WhatsApp number or the link to my WhatsApp on the description of this video, and then join or ask for it. I'll add you there so that we can keep the conversation going. We can see if our prediction works out or if there's anything we need to adjust during the week. Now, this is not cast in stone. I'm just sharing as I see it. Tomorrow things might change, and it doesn't mean that we'll be rigid to the market. We don't control the market. We see what the market is doing and we take, profit from it. That's exactly, what we do here. So thank you so much for joining tonight. So let's make it a date next week Sunday, same time, 8 p.m. You know, next week we are coming into market session with Peter Akinola. Thank you so much for joining tonight once again. So you can also, once you're on that group, you can also drop the peers, the asset, the commodities you want us to check. I was planning to check S&P 500 and a few other things because I really don't have much time, but there are a few things I wanted to talk about on the S&P 500 and the stock market, especially in the US generally, when what's going to be the top of the market, and then why I'm saying that. So, but all of that we'll discuss probably when we have peaceful investing with Peter Akinla at the end of the month. I'll most likely dive into the what the cycle of is going to be for S&P 500 and the other stocks in the market. So let me not take this further than what I've intended to. So thank you so much and do have a beautiful and a profitable week ahead.